Hello, we are back. We are back. Only just though, honestly, you should have seen what's been going on behind the scenes. Up until about 5 minutes ago, we did not have our editor online due to technical issues. We had a live guest pull out at the last minute. And due to the wonderful power of the internet, we've managed to get an intercontinental live guest to join us at very short notice, all the way from New York City. So we're here, we're back, and you are watching the FinTech Show, brought to you by FinTech Magazine, Insurtech Magazine, and BizClik Media Group. My name is Scott Birch, and we'll be bringing you all the latest news, analysis, and opinions from the world of FinTech and Insurtech every 2 weeks, right here on LinkedIn, YouTube, and other digital platforms. Now, joining me today, fingers crossed, is FinTech Magazine Editor-in-Chief, Darren Kag. Welcome, Derin.
Hey, Scott.
Yes, he's there. We made it. And also joining us today is Joanna England, editor of Insurtech magazine. Welcome, Joe.
Hey, nice to be here.
Hey, there we go. Right, the gang's almost all here. Great to see you guys again. And let's cross our fingers and our toes that everything holds together for the duration of this show. For the next half hour or so. Now, Derin, you only joined the FinTech family about 4 months ago during a period when we were off air because we were doing our live events in person in London. So this might be the first time that some of our audience have actually met you. So why don't you introduce yourself and tell us a little bit about you?
Yeah, so I'm Darren Kag. So my background is mixed. So I've been doing lots of journalism independently for about the past 4 years. And interviewed lots of interesting people, done lots of top 100 lists. Recently, we did the top 100 fintech companies, which was actually really popular across the fintech industry. And then my education is the last course I did was the Oxford FinTech program. So we did a lot of things about fintech. And one of the things about the program was we got into groups and we decided what type of company are we going to start. And this was back in 2017. And one of the ideas that I actually had at the time was to create something like a metaverse before the metaverse concept even became popular. But unfortunately, we had to pick 3 ideas and we had to vote on them as well. So my idea got outvoted. So we went with the other ideas. But hey, it just goes to show, in terms of how quickly things change.
Well, yeah, but the metaverse's loss is FinTech Magazine's gain, right, Derin? That's the way I look at it. Every cloud has a silver lining, and you, my friend, are our silver lining today. So let's just move on. Now, before we dive into the latest FinTech and InsurTech news, just to remind you that you can come and say hello by posting in the comments section, which I think is underneath the show as you're looking at it. And also, you can go and vote in our LinkedIn poll. Oh, there we go. There's a little ticker across the bottom. So why don't you come and say hello? Tell us where in the world you're joining us from. And yeah, the LinkedIn poll. What's the question that we've set this week, Derin?
So we've asked, which crypto category do you think the fintech industry should prioritize?
And what are the options?
So the options are decentralized apps, decentralized finance, non-fungible tokens, and virtual worlds, like the metaverse.
Okay. All right. Interesting. All right. Well, I look forward to hearing the results of that poll. Whose phone was ringing? Come on. Own up. No one's owning up. Okay. We had a cat earlier making a noise in the background. I won't tell you whose cat it was. And now we've got phones trying to mess with our FinTech magic as well. But we won't let that happen. Okay. So let's dive now into the latest FinTech news. I do love our new graphics. Great work, video team. So, Derin, why don't you start? Why don't you kick us off with some news stories that have caught your eye this week?
Yeah, so the buy now, pay later firm Klarna launched a physical card in the UK this week. And that was very popular because a lot of people are already using Klarna and its services. And some of them, might not be happy with their banks or so forth, or they might need a card for specific things. And having this option could help a lot of people. But at the same time, some people also saying it's cons, because with credit cards, now you can have e-cards where you can have it on your phone, especially if you've got Android or iPhone, because they can just touch their phones and it makes the payments for them. So it saves on plastic. So from a green perspective, so it's both sides of the story. So we sort of covered both. and then, came up with the conclusion that it's still innovative, it's still good, and something that people could sort of, make positive gains from in the long term. It'd be good to hear some of your opinions as well about Klarna and its card launch.
Yeah, well, when I saw this, I was a little bit surprised. I mean, I had heard rumors, but I've also heard over the last 18 months or so, I've heard the CEO of Klarna being interviewed several times on the radio, and he obviously, buy now pay later does get a bit of a tough press. But he's always really impressive when he's defending Klarna. But one thing that he says is that he positions Klarna as being an alternative to the credit card companies. Now, what we have to remember here is that although Visa are partnering on this card or enabling the payment side, that is exactly where Visa are positioning themselves these days. They are not a credit card company per se. They are a payments provider and a payment solution. And I suppose that was just interesting for me to see how a disruptor like Klarna can come in and really work with somebody like Visa and come up with that kind of solution. But yeah, interesting, definitely interesting news. And it'll be interesting to see how the public take to that and how it might even change the perceptions of buy now, pay later, because effectively it's just another form of credit, isn't it? And I think that's where a lot of consumer organizations were getting concerned, is the fact that more and more people are taking credit. But as Klarna say, we are providing easy payment solutions. It is credit of sorts, but they do their due diligence and their regulation and everything else. How do you feel about buy now, pay later, Joe? Is that something that appeals to you, or do you think it's a bad idea?
Personally, I think it's become a very easy solution to take credit, and I'm in two minds about that one. But then the good thing about it is that it is interest free for the set payment terms, so you can save money with it. It just depends on how easy it is to actually take it out.
Yeah, I agree, and I'm not that au fait with Klarna, but I believe they say that they have certain limits on the amount that you can spend, and then only when you've actually fulfilled those payments and paid them back, that's when you can start to increase your credit limits. But interesting times for sure. Now, Darren, why don't you move on to the second story you've plucked out for us today?
Yep. So this one's not exactly from this week, but it's worth having a conversation about, and it's about how Checkout.com raised $1 billion and it's become valued at $40 billion. And for being a company, UK-based one, it's probably now one of the most successful UK-based ones. And after raising that amount of money, they're going to do lots of expansions. And being London-based and having their Series D, it shows how the ecosystem in the UK is developing. And as a hub, it goes to show that there's a lot of things happening. And it's really interesting how that will move forward, putting the UK on the map. So it'll be interesting to hear some of your thoughts on that as well.
Okay, well, that is interesting. You're right. I mean, and just for visibility here, I think it's probably pretty clear that the three of us on this call at the moment are actually speaking from the UK. So we might have a slightly biased opinion, but we will be introducing somebody, our special guest, in just a minute or two, who is from the US, and he might have a slightly different view and perception of how London is positioning itself as a premium financial hub, which it's always been, let's face it. But it is interesting, that how London is very much so grabbing a lot of the headlines when it comes to fintech and as a centre. I mean, what's your take on it, Derin? Do you think that London is the place to be for fintechs?
Yeah, and there's that data behind it to show that London, out of all the cities in the world, is number one, even beyond New York and California. But then if you're looking at countries, it's the US and then the UK second. So it's a mixture. But when we're talking cities, definitely London is the number one. But at the same time, there's hubs across the UK that are popping up. So, there's the Glasgow hub and there's the Wales hub. There's one in Northern Ireland, and there's little fintech hubs popping up all over the place. There's one in Manchester as well, which is an interesting one that's coming up. So it'll be interesting to see how things develop from here. What do you think, Joanna?
Yeah, I was going to say what's interesting about this is that checkout.com is making a move to open up in North America. And I think that's going to be an interesting one to watch, because UK fintechs and especially digital banks have had a really tough time entering the North American market because it is so competitive, and there's a lot of compliance. And yeah, I think it'll just be an interesting space to watch.
Okay, well, that brings us very nicely onto our guests. So I think it's probably time now to hopefully welcome. I'm going to touch my ear as if I've got an earpiece in here. Can we bring in our special guest all the way from New York today? And that is Stephen Roche from Sapphire. Stephen, are you there?
I am here. Can you hear me?
Yes, excellent.
Great.
We can hear you. Stephen, I want to say a big thank you to everybody who is unaware. We contacted Stephen at very late notice because I knew that he would be glued to the show anyway. Stephen is one of our most dedicated viewers and supporters. So I really appreciate you joining us at the last minute, Stephen, to share insight, because we had some breaking news and we thought who better to turn to than the man himself over in New York, and give us a slightly different perspective on this. Now, the story is, well, in fact, I'll let Derin say what the actual story is, and then let's hear your view, Stephen, on why it could be a game changer or not. Derin, what's the story?
Yeah, so it's about NFTs and, how digital asset cover is going to be, it could potentially be the thing.
No, it's not. No, it's not. We're not talking about NFTs. We're talking about NFTs later. We're talking about the iPhone.
Okay, so okay, that's big. So the fintech industry could be getting transformed right now, right? Because the iPhone, basically Apple has announced that the iPhone could be used as a payments terminal, and it could accept contactless cards and payments. So potentially a lot of fintech companies could be in trouble, the ones that are sort of helping businesses make payments, because pretty much most people have an iPhone if they don't have an Android, right? So it's like a disruptive last minute sort of entry into the market. It would be interesting to hear what your thoughts are on that.
Sure. I'll jump in right now. So, I mean, honestly, Apple, they've been making overtures and creeping into the financial sector over the years. And I mean, they launched the Apple Card, right? A credit card that has interest-free payments. And then in 2019, they did a joint venture with an institutional firm named Goldman Sachs. You might have heard of them. And so they launched a titanium card designed to be used through Apple Pay. And then you go a little bit further. In 2020, they acquired a Canadian startup called MobileWeave, right? So this is, I think, the company that has the technology behind that near field communication, or NFC, is what you might be seeing. So it's a chip payment process that they're doing through Apple Pay. And then they invested last year in April over $1 billion in creating a campus near Raleigh, North Carolina, to help develop more fintech technology. So I believe the beta version of this, I'm going to look at my notes, it's an IO5 15.4 operating system, is going to be due out in the spring. So people are going to be able to test it and see how this works. Apparently, the new systems will be activated via Bluetooth, right, and connecting to another terminal. But this tech turns iPhone into a payment processing terminal. It's going to be competing against Square and Clover. I mean, Square by themselves has about 35% of the POS system in the markets, right? So this is their share as their parent company actually went down yesterday on this news. So it's a big indication that Apple could be a threat, especially since they're a big deployment on cellular or smartphones.
Yeah, absolutely. I mean, I agree, and I think I'm right in saying that Apple have just announced their latest results as well, which another record quarter, I think. So yeah, their stock is just rising and rising. Now, we do have a comment here. I don't know if you can pull this up for us, Kieran. One from Maria Ferrer here. And she says, yeah, it makes sense. I mean, to use a phone, after all, they're always transferring information, and that's what payment processing is. But what are the potential issues? Does anyone see any potential problems or hurdles in terms of using an iPhone to accept payments?
It'll be interesting to see how the technology itself works, because with the touchless technology and the contactless stuff that works with phones, it's not always 100% accurate, and sometimes sort of it's not as accurate as hardware. but I might be wrong. So I'm only speculating now. It will just be interesting to see when the technology itself is available, to see how it works and if it's seamless and if it's fast and if every transaction has to go through, or if sort of, you know, people have to try a few times before the payments go through. But overall, I think I see more strengths than like weaknesses, and a lot of disruption as well. So a lot of competitiveness. One thing that I do predict that I'll follow up from this is probably Android will most likely end up doing the same thing, because they work with very similar technologies. And I actually wrote about the technology behind why credit cards, contactless credit cards and contactless phone payments have differences. And one of the biggest differences between the two was actually this. It's that contactless phone payments is that there's still a lot of undiscovered potentialities within them. And I guess this has been one of them. But then in the future, there could be more as well. So it'll be interesting to see what will come ahead in the future.
Yeah, and just going back to, another couple of comments here. We bring up Navila Kavachi as well. She raises a good point here. You know, what type of contactless cards will be accepted? Only Apple-related cards, ? Well, that's a good point. And you said, Stephen, you know, Apple are in that game already. And I suppose another thing to consider is, you know, what fees could Apple be charging for this service? You know, if companies aren't having to invest in those small little hardware devices to take their payments, are they going to be taking a percentage potentially of those transactions as well? Okay, look, we've got to move on because we've got so much to talk about today. But before we do that, Stephen, we're going to be talking about NFTs after the break. But why don't you just give us a quick update on what you guys are doing at Sapphire at the moment?
Yeah, well, I mean, it's funny we're talking about payments with Apple, and Sapphire is also addressing a similar component in the financial institutional side with standard settlement instructions. So on the payment side, you know, look at credit card numbers and the bank accounts, you got debit and credit. That's a big issue. And the more notable issue that happened about a year ago was the whole GameStop and Robinhood fiasco, right? So that's being addressed on our side and has to deal with payments and real time understanding where the settlements are supposed to be occurring. So we'll have some more news about that shortly. And we had a big event happen yesterday that we'll be doing a press release as well. I think we'll talk about a story with you guys here at the FinTech Show eventually soon about that. So that's pretty much the 30-second spiel of what's going on.
Okay, that's great. All right, well, please stick around, Stephen. We're going to come back to you, as I said, after the break as well. Now, remember, you can catch all the latest news and analysis just like this on our website, which is fintechmagazine.com. Hopefully, you're going to see that little ticker going across the bottom of the screen. So visit fintechmagazine.com and Insurtech as well. And you'll also notice if you visit our websites, they're looking particularly funky fresh today. Because we've had a major makeover this week. And so all of our magazines have a brand new interface and look. And look, there we are, as if by magic. So, yeah, a lot more user-friendly, packed with content. Please go and have a look at our new websites. Now, still to come after the break, we'll be taking a closer look at some of the great features from the January issue of FinTech magazine. We'll be chatting some more with Joanna England about all things Insurtech. And, of course, we'll be looking ahead to FinTech and Insurtech Live, taking place again in London later this year. So don't go away. We'll see you after the break.
That new normal isn't just how you operate your business, it's also how you lead your business.
It is the best possible time to be working in insurance technology.
My name is Alistair Fraser-Hawkins. I'm the Chief Executive Officer of the UK corporate business here at Marsh, and I'm responsible for a segment of our business that looks after clients around their risk and insurance needs. Marsh is the world's leading risk and insurance advisor, and we work with clients across all segments of industry, all sizes of clients, from the very smallest to the very largest, working with them to identify risk, understand what risk is involved in their business, and helping them design a risk management insurance program that satisfies their needs and allows them to transact their business. There are 3 other sister companies: Oliver Wyman, a management consultancy business, Mercer, human capital and consultancy business, and Guy Carpenter, reinsurance brokerage.
My name's Adam Kimisbetti. I'm the digital leader for Marsh in the UK and Ireland. I'm responsible for developing and delivering our digital strategy with a particular focus on our client-facing technology.
The organisation 2020, like for most people globally, was a year like no other. For our own business, it really solidified us as a global family, and equally a real shift in terms of our ability to transact in a digital and virtual sense without actually dropping the level of service delivered to our clients.
Digital transformation at Marsh really has three components to it, which correspond to clients, colleagues, and insurers. The first piece is about creating a digital experience for our clients. The second area is about transforming our internal processes. The third area is how we interact digitally with insurers.
Historically, it used to be we travel to see clients. We're now getting that hybrid model whereby we're able to engage with clients virtually and bring experts from across the world, not just from the local geography, in to see clients.
The key benefit of digital transformation is about improving our client service. The transformation of our internal processes means that we're able to respond to clients' needs much more quickly. We're able to get them insurance quotes faster. The data that we're able to gain and use through that digital transformation means that we can provide richer insights back to their clients.
From an insurance perspective, we're probably one of the industries that needs to come the farthest from a digital transformation perspective when you compare it to other industries. And every decision we make is around, will this decision improve either the colleague experience or the client experience?
All change is challenging and comes with some cost. The level of investment that we're making across all these different initiatives means that our colleagues are having to adapt to new processes and new ways of working at a time when the business is growing and we're needing to keep up with the day-to-day of serving our clients.
We are an advisory business. We talk to clients and every client is different. The ability to utilize AI for some of that data assimilation for us is really powerful. Ultimately, a client comes to us for our insight and intellect around a particular subject. We are providing human advice based on a whole load of data points.
If we're going to be successful as a business and as an industry overall in innovating and disrupting the traditional way of doing things and using new technology, that means that we've got to attract and retain new talent that we haven't traditionally been able to do. And I think if we achieve that, then that will go a long way to modernising the sector.
We also talk at Marsh & McLennan about being there for clients and colleagues in the moments that matter. Never has that been more relevant than the last 18 months. And for a business that's 150 years old, that underpins our culture. So absolutely going forward, we'll be focusing on protecting and promoting possibility for both the colleagues that work for us and the clients that we're fortunate to engage with.
Hey, welcome back, everyone. Good to see everyone still on the call as well. And how cool was that video? We made that. That was super cool, wasn't it? So that was with Marsh, and that brings us nicely into sort of a bit of a Insurtech section here. Now, remember, still to come, we have the results of our LinkedIn poll, and we'll have more about the FinTech Live event. But before that, as I said, we're going to talk a little bit about Insurtech. So, Joe, what's happening in the industry at the moment?
Oh, so much is happening. But today I just wanted to concentrate on a French Insurtech called Neptune Mutual. And the reason why I wanted to talk about that is because it's created a special parametric cover for digital asset creators. So the problem with the NFT industry at the moment is that digital asset creators do try to protect themselves, but unfortunately, the many technical safeguards they put in place don't provide complete protection for them. So as a result, it's kind of holding the industry back a little, because even if they do want to kind of recover any stolen assets, they need to use specialist cybersecurity firms to do it, and very often it's not very successful. So the solution being offered by Neptune Mutual offers parametric cover as opposed to discretionary insurance. And it has an easy and reliable on-chain claim process. And basically what that means is when incidents are confirmed by the NPN token holder community, the resolution is fast and the payout to policyholders are guaranteed. So, I mean, the reason why this is so important is basically because NFTs are becoming increasingly accessible. And as we all know from the business model of Amazon, when something becomes more accessible, it becomes more popular, more people use it. So it's really great to see Insurtech stepping up and providing a solution to a fintech problem, I think.
Yeah. No, that's a really good point. It is a slightly murky world, as you say. And I know that at least one person on this call has been quite involved in some NFTs recently. So, Stephen, why don't you tell us your experience? 'Cause I think you guys at Sapphire, you created an NFT, didn't you, for an event you were holding?
We're doing it for all of our events moving forward. So whether it's a private party event or a conference that we're holding, we're tying NFTs, original art. Currently, they're associated with our logo, obviously for branding purposes, but we're tying it to real world value propositions. So for people who continue following us, our entrepreneurship, aspirations to learning how to do product development, software development, etc. We make them accessible to learning how our process works. You know, if you come to 3 of our events, you can have a 30-minute session with Roche, my identical twin, learning how to develop products, right? If you want to learn how to come up with a pitch for your idea in a boardroom, you can have a 30-minute session with me, with this quantity of events that you've attended. So for now, that's a way that companies can use it for branding for themselves. And it could be something of worth. If Sapphire becomes the next Apple, I'm sure that people will be huge fans and want to say they were there at the first couple of events, memorializing that on the NFTs. But the same thing as your events or concerts or conferences, the ticketing process should also be associated with NFTs as a receipt or as a ticket to go into the place with a associated piece of art. So all this is going to manifest and evolve over the coming years as people learn more innovative ways to incorporate NFTs and associate themselves with artists, specific up-and-coming artists. And that also replicates in the space of audio music, right? People might not need record labels anymore. They can go out themselves in their Instagram community and tell people, hey, here, you can own a piece of my music through this NFT art, and you help promote it, and there will be value to you since you're fans of me helping promote this music, right? So it's endless, the possibilities, and I'm only touching, I think, the very tip of the iceberg. There's a lot more to get into, but yeah, that's what we're doing for ourselves, and I'm sure many other companies, especially up and coming startups, are going to be incorporating NFT strategies into their business.
Yeah, absolutely. Well, look, when you do become the next Apple, don't forget us, will you, Stephen?
No, I
won't. So, Derin, what's your take on NFTs? I mean, do you think they're here to stay, or do you think it's a bit Emperor's new clothes?
I think they're here to stay. I think the thing with them is, and the thing with collectibles in general, is that when someone likes something, they'll pay for it. So, for example, someone might like a football team like Arsenal, and they'll buy all of Arsenal's collectibles, right?
No, they won't. You'll have to think of a better example than that, Fred. No, sorry, go ahead. Other football teams are available. Go ahead.
Yeah, but whichever football team, basically, they'll buy their collectibles. And other people, like you did, like you said, no, they won't, you said, right? And that's the thing with NFTs as well. So a lot of people will be like, no, you won't. Why are you buying that NFT for, sort of thing? NFTs are useless, sort of thing. But to the people who like them, they're worth a lot and they'll pay a lot of money for it. So that's where the value comes in. And the extra value on top is that you could do a lot of things with NFTs. So you could sort of license them for the longer term. So people could actually make income streams from having NFTs, and you could do them with events and that sort of stuff as well. But at the same time, there is the crime side, and this is where the insurance comes in. So it's sort of starting to protect people from cyber crimes and so forth. So it's still in its infancy, and there'll still be a lot of things to come. But at the moment, I think overall, it's an interesting development.
Okay, fair enough. And that sort of brought us full circle there back to the Insurtech side of things. Now, before we move on and talk about the current issue of the magazine and we highlight some of the features that are in there, I just want to say thank you to Stephen Roche for joining us today at short notice and for filling us in and giving us some great insights into the news. So, Stephen, thanks very much for joining us. We appreciate your time, and you go and have a brilliant day.
Anytime. Thank you very much, Scott and team. See you soon.
Thanks, Stephen. Okay, now, as I said, we're going to have a look at the magazine now, and we're going to look at the January issue of FinTech, because it's the 28th of January. So in a few days' time, we'll actually be coming out with the February issues. But for now, let's have a look at Jan. And why don't you both pick out a story particularly that you enjoyed? It might be something that you wrote yourself, or it might be something that that one of the other editors wrote. So, Derin, what was your favourite piece in this issue?
So I like quite a lot of I like the whole thing, but to stand out, I'll go with the front cover story. So with Mission Lane and Shane Holdaway. So it was interesting because it was good to learn that a lot of companies are now starting to focus more and more on financial inclusion. And the thing with Mission Lane is that, they're providing an alternative to credit ratings. And, there's a lot of credit ratings out there, but some people might not have the opportunity, or there might be specific communities where even financial services are not available. So for someone to provide credit to people in different ways using artificial intelligence and machine learning and creating an alternative to credit scores is interesting, because it provides opportunities to people where otherwise they might not have had that opportunity to have credit. And as a result, it helps the entire economy, because when people have access to capital, they can have access to other opportunities. So it's a win-win overall.
Yeah, absolutely. I read that feature actually a few days ago, and it's really interesting and insightful. So make sure anyone watching, go and dive into the magazine. Just to remind you, you can actually view all of our magazines by visiting our websites, and they're all there to view for free. So just dive in, you can look at the current issues, and you can also go back to some previous issues as well. Now, Joe, I think you're going to highlight the Insurtech cover feature as well.
Yeah, correct. I really wanted to highlight the interview we did with Mark Holweger, and he is the CEO and president of Legal and General America. And the reason why I wanted to highlight this was because I feel that Legal and General is trying really hard to reshape the life insurance industry in the US, basically because they have a very large protection gap. Life insurance is not something that is accessible to people in a medium to low income band of earnings. Yeah. Instead, it's difficult to get. It is very much attached to clinical reports. It can take months to process an application and then eventually be rewarded with cover. So it's very different to the sorts of offerings that we've got available in the UK. And the reason for that is obviously because the US health industry is very different to the way we run things in Britain. So I just really thought that was a great story in terms of looking at what Legal and General are trying to do, how they're trying to kind of lead the market, seek urgent solutions to this problem, market life insurance to a different demographic, and basically try and put this product in the hands of people that really need it.
Yeah, absolutely. Like you say, great interview, great work on that one as well. And now, like a parent, I don't have favourites, but I have selected my story of the month, and it is one of yours, Joe. I'm happy to say. But as I say, you're all equal in my eyes. So, Derin, maybe it'll be your story next time. But the one I've caught that caught my eye was with Russ Soper of Finastra. And he's talking about open finance. I mean, this is something that we talk about a lot on FinTech. And it's a really great read, as I said, written by Joe. And we also made a video that sits alongside the in-depth interview that we did. So let's take a look at that video now.
Finastra's mission is to unlock the potential of people, businesses, and communities. Hi, I'm Russ Soper, Chief Information Officer for Finastra. I am responsible for hosting and operations of most of the company's client-facing technology. Ultimately, we provide a complete range of financial services to customers in 130 countries. We're the world's largest pure-play financial services software company, and we're in 90 of the world's top 100 banks. Finastra's mission is to unlock the potential of people, businesses, and communities everywhere by opening up the world of financial services. First, our software can be enhanced and built upon through open APIs. Secondly, through our marketplaces, such as our alternative trade finance marketplace we're building with the ICC. And last, through our open developer platform, FusionFabric.cloud, which is home to about 200 fintechs and hundreds of APIs. We're on our journey to the cloud with Microsoft as well as our internal employee experience. We've also had a very strong relationship with Aptio using their Cloudability product. Akamai has been a key partner on our security journey. Lakeside Systrack has given us the ability to be far more data-driven. And the last I'd mention Lumen, who we've partnered with to modernize our network. We're eliminating a lot of the legacy single point of failure links and fixed bandwidth circuits. Our immediate focus is on banking as a service and embedded finance. Every service you can think of is being moved from where it was produced, and it's being brought closer to where the customer actually needs it. So this is a big area for us, and we're really excited to be helping our customers become a part of it through technology.
Okay, another brilliant video done by our brilliant video team. As you can tell, I'm putting them under a lot of pressure today, which is why we had that rather pregnant pause before we went into the video. It's all part of the show, guys. It's all part of the magic. Now, before we move on, I'm just going to give the video team something else to do and see how quick they are with their fast fingers, because I just want to run through some of the people we've had joining us today and saying hello, because they really are from all over the world. See if you can keep up. We've got people from Tokyo, Bangladesh, Rwanda, India, Bangladesh, the good old US, of course, Jamaica, Ireland, UK, Kenya, Nigeria, New Jersey, Brazil. Who else have we got? Chicago we had. There's Puerto Rico there on screen. Vancouver. There we go. Well, you get the idea. There's people joining us from all over the world. So thank you. We really appreciate your presence here and taking part in the show. Now, let's have a look at the results of the LinkedIn poll. Derin, I'm hoping you have the results here. So can you tell us, again, what the topic of the poll was, what the result is, and then give us a bit of insight into that?
Yeah, of course. So the poll was about specific categories within fintech and which ones to focus on, especially regarding cryptocurrencies, and which ones to prioritize as an industry. So the options were dApps, so decentralized apps, DeFi, decentralized finance, NFTs, non-fungible tokens, and the metaverse, so virtual worlds.
Oh, the thing you invented, yeah? The thing you invented.
Yeah, it's interesting. The invention of that is an interesting topic because it goes as far back as 1968 with the Space Odyssey movie, where it's arguable, but there's a section at the end of that movie where it's sort of a virtual world and it's sort of all sorts of graphics. And in my opinion, that's where the sort of genesis of a metaverse comes from, virtual reality. But coming back to the poll, by far, most of the people voted for decentralized finance, so with 71%.
Oh, wow.
And then the metaverse came in second with 11%. dApps came in with 10%, and NFTs came in with 8%. So it seems that there was more than 765 votes. So it's quite significant, and it's still open for. Well, actually, it's closed. Yeah, it's closed now. So that's complete. Yeah. That's quite a lot of people to say that, and it's quite, big results. So what do you think about that?
Well, look, I mean, that's great. Thank you, so many people for casting your vote. Wasn't anticipating so many of you. That's awesome. And I wasn't quite expecting decentralized finance to run away with it in the way that it did. I mean, to be honest, Derin, you know more about these things than I do because I'm just here to perform. I'm the performing monkey of this show. So you tell me, what's your insight into decentralized finance? Why do you think that matters most to people?
I believe that for decentralizing finance, it creates machine-to-machine communications, and it's much faster, and there's less space for making errors, human-based errors. and there's less space for potential hacks because it's decentralized. And for example, Decentralized Exchanges, which is sort of a vertical of decentralized finance, it's an entire exchange that's based on itself. It's like an entire system that you can plug straight into with your own software or your own hardware, and you can make exchanges, and there's no one in the middle doing anything. It's just you and that machine. And a lot of people within the finance industry see that as something that's, you know, going to be a big thing moving forward. And it's not just about cryptocurrencies. So there's lots of different things within the digital asset ecosystem that this could be applied to. And in the future, it can also apply to specific different asset classes as well. So overall, I think definitely it was an interesting choice. I actually got to vote myself as well. And my vote was for the same. It was for DeFi as well. But I'm only saying it now because the voting's finished. So I'm not trying to influence the vote results.
Yeah. Don't worry. You haven't influenced the result. That's fine. Joe, did you vote in the poll out of interest?
I did. I won't tell you my vote.
Okay, fine.
But I think Darren's right, because decentralized finance is it's like the system that you plug into to then access all those other services that are included in the poll. So it would make sense for that to be kind of streamlined and concentrated on first, because then it makes it easier for all those other things to be used. Does that make sense?
No, that does make perfect sense. As I said, you guys know a lot more about this than I do, so I'm just gonna smile and wave and move on to the next part of the agenda. Okay, if anyone has any strong feelings about that poll, or if you want to tell us why decentralized finance is not the most important thing, come and post in the comments, and maybe we'll have time to come back before the end of the show. Oh, we're already on 42 minutes. But yeah, we might better come back at the end and have a quick chat with you there. Okay, before that, though, I want to talk about some important dates for your diary as FinTech and Insurtech Live returns as a hybrid event in London. And this year it's taking place November 9 and November 10. So did you join us in 2021? I know a few people did. If not, here's a taste of what you missed. Let's see the video. Good morning and welcome to the FinTech and Insurtech live show.
Buy more stocks, pushes the price up. You sell more stocks of the same kind, pushes the price down.
We saw 5 years of growth in digital payments here in the UK.
Eventually the market does work things out if there's a reason to, right? And there was a collective need to have a standard in those industries.
It's phenomenal. You guys have a great vibe in the area.
I love the hybrid events. I think to be here in person is an absolute privilege.
It's great to get into a room with people because you get an energy.
There you go. So if you want to experience the vibe, get in a room with some like-minded people and hear from dozens of industry speakers and experts sharing their insights and analysis, then the dates are 9th and 10th of November 2022. Now, we will be having more of that as we get closer to the event itself, and obviously we'll be having regular updates in the magazine and, of course, on our websites and on this very show. Let me just see if any more comments came through. No, it looks like there's general consensus about decentralized finance. There are no dissenters on the comment section. So I think that's probably all we've got time for this week. So thank you all for joining us. Make sure you join us again in 2 weeks' time. Just want to say a big thank you to Darren Kag and to Joanna England for joining us today and providing all their great insights. And of course to Stephen Roche joining us short notice all the way from New York as our special guest. Thank you, of course, as well for joining us and for taking part, for watching the show. This is available to watch on demand as well. So please do share the link and mention it to your friends and colleagues. Thank you to Kieran and the rest of the video team who not only put together some of the great content that you've seen, but also pulled all the switches in the background to make the magic happen. This has been a BizClik Media Group production, and we'll see you next time. Bye for now.
Bye.
Bye, everyone.